Hello students, hope you all are doing well. Welcome to our YouTube revision mastery classes for the subject taxation. In the last class guys, we have covered the corporation tax capital allowances understanding and we are going to continue with the remainder of the chapter. As soon as we can complete it, we'll do it. After which we are going to complete the loss relief and solve certain section B and section C questions. We are going to start now with our corporation tax for a company. Okay, guys. In the last class, the last thing that we did was a sum on the capital allowances which are provided to a company. That was inclusive of the super deduction and also 50% FIA for certain special rate pool assets like your water heating system, drainage system, and so on. Right? Now, in the pre-trading expenditure concept, what is a pre-trading expenditure? So, before starting of the businesses, usually companies intend to purchase certain machineries, purchase certain assets with before starting of their or before commencement of their trading. And is the reason why there is certain pre-trading expenditure which is provided to the companies to ensure that if an asset is bought for the company's sake to be used in their business activities, it should be considered as a asset purchase for business purposes and can claim capital allowances for the same, right? Or any specific expenditures not for only the asset, but any other expenditures which are incurred for the sake of business, which has been incurred before the commencement of the business, that can be considered for the business if in case it is solely and exclusively for the purpose of business activities of the company. Okay. So the rules of pre-trading expenditure are the same for companies and for the sole traders. If you remember the chapter for sole traders, wherein pre-trading expenditure is provided to you, you can actually go back a couple of years and you can take any expenses which have been solely and exclusively incurred for the purpose of business that can be claimed on the date as if the expenditures were incurred on the day of the commencement of business. Okay. Any revenue expenditure incurred, like any normal expenditures incurred in the 7 years before the company commences to trade. So maybe my company, that is a company, it commenced to trade on mm, 1st October 2022. So by taking it 7 years back, okay, by taking it 7 years back, that is 1st October 2016, no 15, right? 2015. From 1st October 2015 to 1st October 2022, whatever are the expenditures that I've incurred for the sake of the business or for the sake of my trading purposes, or all of the revenue expenditure can be claimed as if it had incurred on the day when I started my business. Okay, which would have been allowable if the company was trading is treated as an expense on the day when the company starts trading, as I already told you. Any capital expenditure is also treated as if it was bought on the first day when the trade commences. Any capital allowances will be claimed in the first capital allowances computation. So when you compute the capital allowances, first you're going to give the AI and everything to these assets which are purchased before the commencement of the trade, because we are assuming that they actually were purchased on the day of trade because they are solely related to the trading activities of the company. Okay. Now comes the next part, that is interest income, loan relationship rules. So there is certain income which the company receives and there is certain interest expense which the company incurs, right? When does a company actually receive an interest income? When the company has made any sort of investments. Okay, like purchasing of any bonds or anything, or through any other means if the company is earning any interest income. Interest income, then in such a case it will be classified as an interest income. Always remember one thing guys, interest income that the company generates cannot be trade related. It will always be non-trade related, right? If my trading activities is to actually consider like, maybe I'm into manufacturing activities. If I'm purchasing any bonds or anything, that is non-trade related, correct? So always an interest income is going to be non-trade related. It is never going to be trade related. Okay. And an interest income can only be trade related if in case it is my company's business to actually provide loans or something like a bank. Okay. So if I'm a bank with my trading activities include providing loans to the clients, right? So technically there I would earn interest income. So that could be considered trade related interest income, but that is banks are any which way is not examinable. So whenever they mention in the question interest income, you have to only assume as if the interest income is non-trade related. Okay. And trade related interest expense would be incurred. Maybe I've taken a loan or I've issued bonds out in the market or I've issued something else like debentures or something out in the market because of which I have to pay the annual interest and also the capital repayment. So the annual interest will be considered here as an interest expense for the company. And that could be trade related or non-trade related, right? Maybe I've taken a loan to purchase my private residence. So the interest that I'm paying on it, that is non-trade related. But if I've taken a loan to actually construct an asset for my business activities, then that loan can be considered trade related loan. Okay. So there are different effects for the trade related loan. I mean the interest expense which is trade related, interest expense which is not trade related, and interest income which is non-trade related only. Interest income is never trade related. So in addition, the cost of writing, okay, wait, I have to explain you this, correct? So expenses related to borrowing money. Interest paid on overdrafts, banks, loans, corporate loan notes, and other costs such as arrangement fees and other incidental costs incurred in raising loan finance. So all these are going to be considered expense related to borrowing money. Income received from lending money. So if in case I'm lending money on that, if I'm receiving any interest, it is always going to be non-trade related. Interest income including interest from bank deposits, loans, government stocks, and corporate loan notes. Okay. So I've explained you all this, guys. Yeah. In addition, the cost of writing down an impaired debt arising from lending of money is an allowable expense under the loan relationship rules. Okay. So if in case I'm writing down any expense of any impaired debt, that means maybe I had given a loan to a customer, I had given a loan to another company, right? But the company maybe became insolvent and is unable to pay me. So that becomes an impaired debt to me because that will not be my interest income, right? So whatever is my interest income that I will not receive because the customer or the company has become insolvent, right? To whom I gave a loan. So interest income that I was going to receive, I'm not going to receive now. So that will be considered now as an impaired debt and it can be claimed as a deduction against it. Okay. Now that was just a little bit of part, guys. Now this is the important part. So if there is any interest receivable, that is your interest income. Trade purpose, see they've mentioned not applicable because obviously a company cannot have any loan which is related to the trading activities. Sorry, a company cannot have an interest income which is related to the trading activities of the company, right? Interest payable on a loan taken out to purchase plant and machinery for the trade. So like if I'm in case I've taken out a loan to purchase plant and machinery, on a loan taken out to purchase property used for trading purposes like an office building or something, on a loan or overdraft to fund daily operations like working capital. So for maintaining my working capital if I have taken a loan, or on loan notes to fund trading operations of the company. Okay. So those could be trade related loans. Now for non-trade purpose, interest received on bank accounts, right? So obviously the interest that I receive, it is the interest receivable. Interest receivable which is for non-trade purpose, interest receivable on investments such as gilt-edged bonds or anything and any sort of loan notes which are there out in the market, and interest that I normally receive from the bank accounts, maybe I'm depositing certain amount in the banks. Okay. And for your interest payable on a loan to purchase a commercially let property where the rent would be taxable as property business income. Maybe I have purchased a property on by taking a loan, okay, and that property I have let out. So I'm earning certain rental incomes from that. And on the other hand, I'm also paying interest because I've taken a loan to purchase that property. So that interest expense that I'm incurring, that is not business related for me, correct? Because my business is to do into is to get into manufacturing activities, but I am on the other hand taking a flat or taking a property on loan so that I can let it out. Okay, so that is non-trade related loan. On a loan to acquire shares of another company, that is also non-trade related loan. Okay. Note, generally all the okay, I guess I've already explained you this. You can go through it. Yes. So what are the adjustments for each one of them? Interest, which is receivable, that is any which is non-trade related. So firstly, when you calculate the tax adjusted trading profit of the company, since the interest receivable is non-trade related, it shall be added back, correct? Because the interest which is receivable, that would have been added as an income in the tax adjusted trading profit, and it is not trade related. So not added, sorry. So that would have been included in the tax adjusted trading profit. To disallow this income, I will deduct it, this interest receivable. Okay, should be deducted when calculating adjusted trading profits and included in the TTP calculation under interest income. So technically, your interest which is receivable, always remember guys, here we have to only take the interest which accrues, interest which is receivable throughout the period, not the interest which is received. So if in case they've mentioned in the question set that certain interest is received, you have to calculate the interest which is actually receivable for the period. Okay. So interest which is receivable, that shall be in the tax adjusted trading profit. It is any which is non-trade related. So that shall be subtracted because that would have been included as an income in your profits. So that shall be subtracted from the tax adjusted trading profit and included within the interest income head of the taxable total profits computation of a company. Okay. Interest received and receivable is usually credited to the company accounts on an accrual basis. Yeah, so they are explaining the same thing that you have to always take on an accrual basis. Interest paid and payable on borrowings for a trading purpose is deductible as a trading expense. So technically, if in case I'm actually paying certain interest expense and probably the loan that I've taken on which I'm paying this interest expense, it is associated with the trading activities of my company. Maybe I've taken a loan to purchase a plant and machinery. So the interest that I'm paying, that is trade related, right? So if that has already been deducted in the tax adjusted trading profit, so while doing the tax adjusted trading profit, I will not do any effect for it. I will show zero adjustment, right? Because it is deducted and it is allowable, correct? Because it is trade related. Now, interest payable on borrowings for non-trading purpose. So you have to add back to trading profit and deduct from interest income. So guys, what they are saying, if the interest expense that I'm incurring, that is non-trade related. Maybe I wanted to purchase certain shares and for the purchase of those shares I've taken a loan, right? So purchasing of shares is not trade related, correct? So it is a non-trade related interest expense that I'm incurring, right? On the loan that I've taken to purchase the shares. So guys, here since it is non-trade related, it would have been deducted in the profit. So while actually taking the tax adjusted trading profit, we are going to disallow it and we are going to add back that interest expense because it is non-trade related. But obviously it is an expense. So it will be deducted in the interest income head. Whatever are your incomes from that, the non-trade related interest expense is going to be deducted because obviously I'm paying that loan, correct? I'm paying the interest on that loan. So I should be able to claim a deduction somewhere for it. I hope guys you have understood all the calculations here. Always remember one thing, that whenever you take interest, it is to be taken as interest which is accruing throughout the period. That is interest receivable or interest payable, not the interest which is received or paid, because it is for a company and company works on accrual basis. If it was for an individual, you would have taken the interest paid and interest received. Okay guys. Now, let me show you an example through my own random words that you know how an interest receivable is to be calculated if they've not mentioned everything clearly. Okay, maybe say I have an interest payable calculation to be done. Okay, for my accounting year starting from 1st Jan 2022 ending at 31st December 2022. Okay, this is my accounting period. Balance at the start of the year for my interest which is accrued. Accrued interest expense, right? Which is to be payable, right? Accrued interest which is payable. Maybe say that is 5,000, right? I paid interest. I genuinely paid the amount of interest of 12,000, right? And at the year end, so sorry guys, at the year end, the accrued interest expense is 7,500. Okay. This is the scenario given to me, guys. Now I'll have to understand that you know this is the information given to me. How will I identify the interest which is accrued, or you can say the interest which is payable for this year? Right? Now, this is the accrued interest of the previous year. Correct, guys? Previous year I would have not paid it. So in the previous year liability, I would have shown accrued interest, which is the current year opening balance, right? So this relates to the previous year. This I have paid in the current year. Correct. So 12,000 I have paid in the current year, but this relates to the previous period. So this does not accrue this year. So I'll subtract this 5,000 because it was relating to the previous period. It does not matter how much I've paid or how much is accrued. I have to identify how much is accrued for the current year. Right. So this is related to the previous year. It would have already been included in the previous year calculation. Right. So this shall be subtracted. And even after paying 12,000 at the year end, still 7,500 is accrued, guys. Even after actually paying 12,000 at the year end, still 7,500 is accrued. So that will be added to actually identify the interest which is actually payable, right? So 12,000 minus 5,000, which is 7,000 plus 7,500, 14,500 was accruing for the year. Okay. Always remember, guys, it's like, 14,500 was accruing for the year, out of which I paid this 12,000. I paid 12,000. So I would have stated 12,000 that I paid 12,000, correct? And I would have stated the 7,500 as accrued. So that is what we did. But obviously remember one thing, that 5,000 that is accruing for the previous year, that is not to be considered because that was accruing in the previous year. You have to identify the amount which is accrued this year. Okay? Always remember, guys. So opening balance is to be deducted, and at the year end balance, whatever is there, that is to be added to identify the amount which is actually accrued. Okay. Now impaired debts. The write-off of impaired trade debts. So maybe I've actually, had certain trade debts like, giving any credit period to the customers or anything, that is trade receivables, right? So giving any credit period to the customers would result in trade receivables, right? That maybe I'm selling goods on credit basis, and it is a policy that they have to pay me after 3 months. If they do not pay me after 3 months, I will try to chase them that, your amount is due and you've not paid it. But if they are still not willing to pay me, maybe they've run away, maybe they have become insolvent, maybe, they do not have the money. So it becomes my impaired debt because I cannot collect it from them. Right? It is, you can say, my loss. You can say irrecoverable debt or impaired debt. So impaired debt shall be charged as an expense and it is considered as an allowable, or you can say as a deductible expense in the tax adjusted trading profit. So impaired debt expense would have already been deducted from the profits, and when you calculate the tax adjusted trading profit, the adjustment will be zero because obviously it is allowable. It is trade related impairment, right? It is trade related debt that I am making a loss for, right? So that is an allowable expense, and its adjustment while calculating the tax adjusted trading profit will be zero. But guys, if in case there are any trade receivables associated with my non-trading activities, like maybe I've given a loan to a customer. Now, giving a loan to a customer is not my trading activity. My trading activity is actually to sell off goods and provide a credit period to the customers, right? My trading activity is not giving a loan to the customers. So that is not trade related. Or if in case I'm giving a loan to my former employees, that is also non-trade related. So if there are any impaired debts for that, that would have been deducted in the profits. So while calculating the tax adjusted trading profit, I will add them back because this is non-trade related, correct? Giving a loan to a customer and the customer, if he is not paying me later on, it is an expense to me, I agree, because it is my loss. But, and I will treat it as an impairment expense also. But it is non-trade related. So I cannot allow it to be considered under tax adjusted trading profit. So it is already deducted. So I'll add it back to disallow it. But obviously it is my expense. So will it be treated? It will be treated an interest income. So in the head interest income, I will deduct the impaired expense, right? I can deduct it as an expense because obviously at the end of the day it is my loss, so I can claim it. But since it is non-trade related, I will add it back in the tax adjusted trading profit and claim a deduction for the same in the interest income head. Mm, this is not required, guys. I've already explained you this part. Let us solve one sum, shall we? Trinity Limited is a clothing manufacturer who received bank interest of 2,800. Bank interest, which is receivable, not received, receivable, that is always non-trade related. Okay. So that is to be added back. Sorry, that is to be deducted since it is an income, it was added, right? In the profits. So in order to disallow it, it should be deducted from the tax adjusted trading profit on 14 December 2022 and paid loan note interest of 19,500. So they have two things with them: 2,800 the interest which is received, not receivable. We have to calculate the receivable amount, and it is 2,800, and they have paid a loan note interest of 19,500. The loan notes were issued in January 2022 to raise finance for the purchase of new packing machine and therefore trade related loan. So this interest, that is an allowable deduction because it is a trade related interest expense that I'm incurring for the loan that I've taken for packing machine, right? So it is a trade related loan. So in calculating the tax adjusted trading profit, the adjustment will be nil. But guys, always remember, this is the interest which is paid, right? I have to identify the interest which is accrued for the year. Okay. So the company prepares accounts to 31st December each year. Accrued loan note interest payable at the year end is £9,000. There was no interest receivable at either 31st December 2021 or 2022. Explain how the bank and the loan note interest will be treated in the corporation tax computation for the year ended 31st December 2022. Guys, my interest that I've received for the year is 2,800. From the previous year, there is no balance carried forward for the interest income, right? So that means there is no interest that was going to be received from the previous year, right? After paying this amount, after receiving this amount of 2,800, I do not have any other interest balance at the year end, right? I'll do this balance brought forward. Yeah. And this is my balance carried forward. Right. I do not have any interest that is to be received. After that, I will receive 2,800. So that means 2,800 becomes my accrued amount, correct? Because that was accrued and that is paid for. So everything is settled is the reason why there is nothing in the opening, nothing in the close, right? So he paid me 2,800. That much was only my accrued, that much was only my receivable. I've received that amount. So there is no balance of the amount which is to be received at the year end, and there was no balance in the opening also, right? So what if in case there is no balance in the opening and closing, we will assume that the interest which is received, that is only my interest receivable, and the interest which is paid, that is only my interest payable. Okay. But if in case there are any balances provided, so we have to look into that. So for your interest paid, it is 19,500. Interest paid, guys, is 19,500. Just a second, yeah. Interest paid, it is actually 19,500. But even after paying 19,500 interest, you can see here the company accrued loan note interest payable at the year end is 9,000. So that means I paid 19,500 during the year. But even after that, the balance at the year end, that is the balance carried forward, is still 9,000. Right? That means total this 19,500 plus 9,000, that is going to give me 28,500. So this is the interest which was payable during the year, but this was the interest that was accrued for the year. But I paid this much, that is why it is 9,000, correct? So in order to identify, I'll add the year-end balance to the interest which is paid. And if it was an opening balance that was belonging to the previous year interest, so that I will deduct. Okay. I hope guys it is clear. These sums you all can manage by yourself. Now we jump to property income. Okay. Now guys, what is property income? So any property that I've let out for a company, okay? Any property that I've let out. Maybe I've let out the property or my premises, maybe say my part of my office building or maybe my warehouse or anything that I've let out. So I'm earning rentals on it, right? So those are to be considered as my rental income. Now, a trading company may hold property for investment purposes or have premises which are rented out as they are surplus to the company's current trading requirements. Maybe the company had a building which was the company's office building, which was actually having 5 floors. Okay. But the company required only the first floor for 4 floors, 1, 2, 3, and 4. Right? So the top floor, the company maybe gave it out on rent. It was not required by the company. So the company has given it out on rent. Or maybe the company has held that top floor for capital appreciation or anything. So then in such a case, the company has these premises which the company is not using, but they are generating income from it. So these would be considered as the company's rental income, right? Or you can simply say property income. Okay, now treatment for companies. So property income for individuals, it was on a paid received basis and everything. But here it is going to be on a payable receivable basis because it is a company, not an individual. The income from these properties is assessed as the property income, property business income, calculated basically in the same way as for traders. Allowable expense are those associated with the normal trading and upkeep. So any sort of revenue expenditures like repairs and repaintings and everything that is considered as an allowable expense, like property maintenance, repairs, insurance, and irrecoverable debts. That maybe the tenant, he actually does not pay me any sort of amount. Like maybe the tenant stayed for 10 months, but he left after the seventh month. No, maybe say that he actually left after the 10-month period, but before leaving, he did not pay me for the last 2 months of rentals. So that is becoming my impaired debt now, and that can be claimed as a deduction. Okay. However, there are few differences for the companies as compared to an individual. That property income, as I told you, is always taxed on an accrual basis, whereas for an individual, it is on a paid basis, cash basis. Okay. The company is assessed on the property income arising in the accounting period, not the tax year of for individuals. So here it is the accounting period which is considered, not the tax year. Okay. So if the company's accounting period runs from 1st October to 30th September, right? And the company earns rental incomes per month of £2,000, right? So the company will say that the rental income which is accrued for the year, because the company has given out the property on rent. So it is company's rent income receivable, right? So £2,000 into the 12-month period, that is going to be £24,000. So the company accrues this much interest for the year and this much property income can be stated. Okay. Now, technically, it does not matter whether how much amount is paid. If the tenant pays me only for 10 months, maybe because the tenant has been, I mean, the property was actually given out on rent or let out from maybe say 1st December, right? So the tenant will only pay me for 10 months. So 10 months is the amount that I've received. But obviously, guys, that I have to consider the amount which is actually accruing throughout the year. Okay, that means the amount that I was going to receive, or sorry, I was going to receive throughout the year. Okay, guys, I hope you keep that in mind. Okay, now we'll understand the treatment of interest payable and the treatment of property losses. So interest payable is what? Maybe say that I have taken a loan, okay, to purchase a property, right? I have taken a loan to purchase a property and on that I'm paying interest expense, right? And that property I have given it out on rent. Okay, so that there I'll earn property income, correct? So that means this interest that I'm paying on this property, that is associated with the property income, correct? I mean, technically, it is this loan I've mainly taken for the purchase of this house, and this house I've given it out on rent. So it is kind of, you can say, associated with the property income, correct? So the treatment of interest payable, what it is, you will understand here. Interest payable on a loan to acquire or to improve an investment property is not allowed as a deduction from property income. Instead, it is taxed under the loan relationship rules and is therefore deducted from interest income. So technically, you would say that this interest I am actually taking for the purchase of a property that I've given out on rent. So it shall be deducted as an expense from the property income, head. But it is not allowable that way. That is because this loan that I've taken, that fits the category of non-trade related loans, and non-trade related loans are actually considered under the head interest income. So if in case I've taken any loan on which I'm paying interest for the acquisition of a property, or it could also be for an improvement. Improvement means nothing but maybe say this was my property and this was the lawn area of the property. I have actually built the lawn area separately, wherein I've included some, muddy area or anything. I have also included some other components within the lawn area, which increases the value of my property, or I've maybe made a separate new terrace on the property, which actually increases the value, or maybe, I've added some certain solar generators or anything. So all these things I've added to the property, so which improves the value of my property. So any expenditures that I've incurred for the improvement of this property can be considered as a capital expenditure, right? So for maybe making this improvement to the property, I've taken any loan, and on that loan, if I'm paying any interest, that will also be considered in the interest income head. That means for the acquisition of the property or for the improvement of the property, if I've taken any loan, and on that loan I'm paying interest, it will be added back. I mean, it will not be considered in the, sorry, it will not be considered in the property income head. It will be considered in the interest income head and will be deducted from the interest income as a loan taken for the property or improvement to the property. Okay. I hope guys this is clear to you all. Yes. Now property loss. Property profits and losses on all properties are pooled together to obtain the overall profits and losses. This is what we used to do for an individual. We used to take an aggregate of all the property business profits and losses that I'm getting. So maybe it is more than one properties that I've given out on rent. So it is more than one properties that I've given out on rent. So maybe from one property I'm getting a loss of 5,000, and from the other property I'm getting a profit of 5,000. Sorry, 10,000. Sorry, profit, right? A profit of 10,000. So that means I'll have to aggregate them too, and the net profit is going to be 5,000. Okay. A property loss is first set off against total profits before QCDs of the same accounting period. So it should first be set off against the total profits of the current year, and obviously before deducting any sort of QCD. So there is a possibility that the QCDs might be lost, right? Then carried forward to be set against the total profits before QCDs in the future. Also available for group reliefs that you'll understand in the chapter of group companies. Okay. So that means if in case I have any property losses which I do not want to use in my profits, maybe I can surrender it to my group companies, to the other companies which are belonging to the same group as mine. Okay. Partial claim is not possible, so the QCDs might be wasted. Losses not offset against the total profits of the same accounting period can be carried forward or surrendered. Group relief to other companies within the same group, right? Technically, there is not much to be dealt with in property business. Now, lease premiums, where a company actually receives a premium. So, if you remember what is a lease premium, guys? Maybe I am the owner. I have given a property, or maybe say consider an office building for once. Okay. But I'll just make a property here. Okay. I have given a property to a tenant. Okay. I have given a property to a tenant. So I am the owner, he is the tenant. The tenant tells me that I tell him that you have to pay an annual rentals of £10,000. Okay. Specifically, lease premiums are not on property, guys. I'll just show you something else. Maybe say it is a machinery. Okay. It is some sort of machinery. My drawing is very bad, guys. Please ignore it. It is some sort of machinery that I was owning, and I've given that machinery out to the tenant on rent. Okay. So I would be, having certain lease premiums or anything. So here what will happen? Maybe say I'm earning £10,000 of annual rentals because I'm charging them that to the tenant. So the tenant says if I'm taking this on loan for a period of maybe say 30 years. The tenant says, I don't want to pay you £10,000 every year. I'll make you some sort of down payment. It is like a down payment, guys, lease premiums. Okay. So if in case the tenant had to pay me £10,000 every year for a period of 30 years, over the period of 30 years, he had to pay me 3 lakh pounds. Correct. But the tenant says, I am paying you 1,50,000 pounds right now. Okay. Right now itself, I'm paying you 1,50,000 pounds, and the remainder 1,50,000 pounds I'll pay you over the period of 30 years. Okay. So this is like a down payment that I've received. It is like a lease premium that I've received. So that lease premium, how it will be chargeable, we have to look at that. Just a second. Yes. So the lease premium calculation, I think they've not mentioned it here. Yeah. So the lease premiums calculation, guys, it will be the same way as we have done it in the property income chapter. Like whatever is the lease premium amount, from that an allowable deduction will be there. That will be nothing but lease premium into 51 minus 50, sorry, n minus, I guess it is 50 minus n into, sorry, it is some formula, guys. I'll just show you. Just give me 1 minute. I've forgotten the formula. It must be there in a sum. Okay, just give me 2-3 minutes. I'll show you. Okay, we'll complete this part first. That is qualifying charitable donations. All donations to charity by companies are allowable. If in case it is a small local donation made by a company, it is allowable as a trading expense. So if in case I've made any donation which is to a small local to a small local charity, then it is allowable as a trading expense. That means when I calculate the tax adjusted trading profit, my adjustment will be zero because it must have already been deducted and I'm treating it to be allowable. All other donations, whether under gift aid or not, as an allowable deduction from the total profits. That means if in case I have made any other donations like under the gift aid scheme or any donations made which is not small or local, which is actually a national charity. So then in such a case, if in case it is deducted in the tax adjusted trading profit, while calculating the tax adjusted trading profit, I will add it back, not because it is disallowable or something, but because it is not considered here. It is considered under the head QCDs, right? We will take it to the QCDs and then deduct it from the total profits. Okay. And always remember, guys, the amount which is paid in the accounting period is deducted from the total profits. So here it is not something which is accrued basis or anything. Whenever you pay the QCDs, at that time you will get the deduction for QCDs. If QCDs paid exceed the total profits, they cannot be actually carried forward or anything. No relief for the excess is given. The only relief that could be available is in case if you surrender it to the group companies. Okay. This you already know, we do not need to go through. Yes. Now comes the long period of accounts, guys. So where a company has a period of account of more than 12 months, right? That means the company's period of account may be for 1 year. They prepared accounts from 1st March 2022 to 31st December 2023, right? So this is a very long period. It starts from 1st March and gets completed on 31st December. So how many months is it? March, April, May, June, July, August, September, October, November, December. So December 2022 will be 10 March, April, May, June, July, August, September, October, November. Yeah, 10 months, correct? So 1 year of 10 months, that means in total this is a period of 22 months. I've taken a too big period, right? So always remember, guys, when there is a period of account of more than 12 months, it is going to be distributed into two accounting periods, first accounting period and second accounting period. The first accounting period will be 12-month period only, not less or greater than that. That is going to be from 1st March 2022 to the period ended 31st, sorry, not 31st, 28th Feb, or you can say 1st March 2023. I'll write 28th Feb 2023. And from 1st March 2023 to 31st December 2023 will be the second accounting period, which is a 10-month period. So whatever are my calculations and everything, if in case it is mentioned for 22 months, I will always time apportion everything, that it will be 12 divided by 22 for the first accounting period and everything will be 10 divided by 22 for the second accounting period. Okay. Okay. Now trading profits before capital allowances. Guys, this is not important. You all can go through this later by yourself. I've explained you all this already. Yes. So with this, guys, we are done with our chapter. I hope start to end it was clear to you all. There were a couple of sums which we have skipped, which is not required because we are going to do a full-fledged sum anyway once we start section C solving. So before we intend to actually start with all that, let us just take a short break and return with the next chapter, that is your loss relief for the company. Okay. Okay, guys, I hope we are back. Now, let us complete our last chapter, that is losses for companies, and then start with certain section B questions. Okay, so guys, losses for companies, it is very, understandable and very easy for you if in case you've already done losses for individuals, because losses for individuals is actually quite complex as compared to losses for companies. Losses for companies, it is very straightforward that how you're supposed to claim a loss relief. So you'll understand start to end how to actually claim the loss relief for a company. So guys, losses for companies, what is the loss that the company gets? So firstly, the company gets a trading loss, and that trading loss the company gets for the accounting period. Yes, the trading loss that the company gets is for the accounting period. That means the accounting period if the company prepares from 1st Jan 2023 to 31st December 2023. The company would have had a trading loss of 25,000 pounds. Right? So this is the loss that the company has. Now, trading loss is to be claimed as a loss, right? And for that you have a relief because your trading profits of a company, they are chargeable for tax. So it's not like HMRC will just charge tax and when you're having a profit and not give you any sort of deduction or any sort of relief for the losses that you're incurring, right? So it's not like that. They will actually provide you for a relief for the losses that you have incurred. Now the trading losses, how are the losses claimed? What is the amount of loss which can be claimed? So whatever trading loss you have, okay, and whatever trading profit you have, to that your capital allowances are also considered. Because you must have purchased certain assets also during the year for which you must have got capital allowances. But those purchase of assets, it is an expense, but it is not included in the trading loss of the company or trading profit of the company. So for that, additionally, capital allowances are also given. So that will also be deducted. And then the total reduced amount can be claimed as a loss relief. Loss amount on which you can claim the loss relief. Okay, guys. So maybe say that my trading loss for the accounting period was 10,000 pounds and my capital allowances were 13,500, right? So in total, I can claim a loss relief of the amount of 23,500 pounds. Okay. I hope guys this is clear. It could also happen that instead of a trading loss, you have a trading profit, right? So maybe I have a trading profit here, correct? I technically have a trading profit, but so if I have a trading profit, it's not a loss. I cannot claim a relief for the same. But you can see here, I have capital allowances also. I have to consider capital allowances also. So capital allowances, if it is deducted, it is a negative 3,500, right? Because it is 13,500 capital allowances. So then I will have a loss amount and this can be claimed as a relief. So always remember guys, capital allowances can either turn a trading profit into a loss or could increase the trading loss of the company and accordingly you're going to claim the loss amount as a trading loss relief. I mean as a loss relief, not just a trading loss relief. Okay. Now there are different types of losses, trading losses and also other losses. Now, other losses include any property business losses. That means I'm giving out any properties on rent, but maybe I'm also incurring certain revenue expenditure on the same. So maybe I'm getting certain losses for the period. Okay. Any capital losses, maybe I've sold certain assets during the year, but those assets which are sold, maybe they are sold at a loss. Correct? So that means I have a capital loss. So for that also a relief can be claimed. And lastly, if in case there is a trading loss, firstly, what are the options or you can say the choices available for claiming the loss relief? So You will understand the calculation of trading loss, factors affecting choice of relief, and relief amount which is available. Right? So let's get started. As I told you, you'll first take the tax adjusted trading profit or loss that you have got, and you will subtract the capital allowances for them. This will be the total adjusted trading loss that you can claim a loss relief for. Okay. Okay. So let us understand through this sum here. Carlos Limited has the following results for the year ended 31st August 2022. He has a gross profit of 30,000. Expenditures like depreciation and allowable costs are 5,000 and 12,000, which has been deducted, and thus the profit that has been given to us is 13,000 pounds. The capital allowances for the year amount to 21,000 pounds. Now I have to identify that what is the tax adjusted trading loss for the year ended 31st August 2022. I have to also calculate the tax adjusted trading loss for the year ended 31st August 2022, assuming the facts are same except that the company made a net loss as per accounts to 10,000 pounds. Okay. Firstly, we'll complete the situation A. Right. So as per the situation A, firstly I'll have to calculate the tax adjusted trading profit or loss that is there. Right. Tax adjusted trading profit or loss. So when I calculate the tax adjusted trading profit or loss, guys, always remember we take it from the bottom. Okay. So the bottom amount is 13,000, which is the net profit as per accounts. We take it from the net profit, which is 13,000, and then we make adjustments for the expenses which have already been deducted and for the profit that is there. Okay. So guys, we have a profit of 13,000 here, but there are certain expenditures which are deducted from this profit of 13,000. So that is depreciation and allowable cost. Depreciation is disallowable because it is a non-cash expense, or you can say it is not related completely, for because companies separately get capital allowances. They get WDA in capital allowances, which is a form of depreciation expense that is provided in the form of allowances, right? So that would have already been included in these allowances. So here depreciation is disallowable. So I'll add back that depreciation of 5,000. Right. And allowable cost, obviously they've mentioned it is allowable, so I will make no adjustment. So allowable cost will be 0. Whenever I'm making no adjustment, guys, always remember you have to mention allowable costs and you have to mention 0. You have to show it even though there is no adjustment for it. Okay. So 13,000 plus 5,000, 18,000 is my tax adjusted trading profit. Okay. 18,000 is my tax adjusted trading profit, and my capital allowances are 21,000. Right, that will be deducted. You can see this brings me a loss, and thus it will be a loss relief, loss amount that I can claim a relief for. Okay. Then the second part, you have to calculate the tax adjusted trading loss for the year ended 31st August 2022, assuming the facts are same except that the company has made a net loss as per accounts. So that means you can ignore all this. I mean, they're trying to say that here they have a profit, but instead, if in case they got a loss of 10,000, what will happen then? It will not tally, guys, the amounts, because they've just given a situation. So 10,000 is the loss as per accounts, correct? As per the accounts, the loss is mentioned as 10,000. But obviously in this, the depreciation is also deducted. So depreciation, for that it is included in the capital allowances. So we added back. So add back the depreciation which is already deducted, 5,000. This was a loss. So thus my loss is only 5,000, my tax adjusted trading loss. It is only 5,000, right? To this, the capital allowances of 21,000 will also be deducted, and thus the total amount of loss relief is going to be 26,000. I can claim a loss relief for 26,000. I hope, guys, start to end both of the concepts were clear to you. now guys, we have understood that what is the amount of loss relief. Now we have to understand that how this loss relief can be claimed. Okay, just give me 1 second, guys. Okay, guys. So there are different ways through which I can claim a loss relief. One is carry forward relief. So if in case in my accounting period ended 31st December 2023, I got a loss of £10,000. Okay. In this period ended 31st December 2023, I got a loss of £10,000. I have an option to carry forward this loss to the next period. So maybe in the next period, 31st December 2024, I would have my trading profits, right? So if in case, my trading profits are there, carry forward against available future total profits. Okay. So it is total profits, guys. So in the next year, I would have total profits, right? Right. That is my trading profit. That is my, the property income and everything, this interest income and everything, those actually sum up to my total profits, right? Chargeable gains and everything. So I have total profits in the next year. In the next year, but it is always before QCDs, okay? That is not my taxable total profits, just my total profits before deduction for QCDs. So from this total profits, I can adjust this 10,000 loss if I carry forward it. And here for companies, if I carry forward a loss, it can be adjusted against the total profits and also partial claim is allowed. So technically, if I carry forward it, I will have the option to actually save my QCDs also, right? But that is only if I carry forward it, okay? So I'll just tell you that if I carry forwarded it, my total profits, not the taxable profits, my total profits were 7,000, okay? And my QCDs was 3,000. So if I would claim this and if no partial claim was allowable, this QCD's relief would be lost. But since I'm carry forwarding it, that means I can make a partial claim here and also save my QCDs. Okay, guys. So if I make a partial claim here, I will only adjust from my total profits, which are 7,000. I will only adjust 7,000 loss relief. Sorry, I will not adjust 7,000. I will adjust less, right? So if my total profits are 7,000, I will only adjust loss relief of 4,000 because I can make a partial claim, correct? So then 3,000 will be my profit and then my QCDs are there that is paid for. So 3,000 will be deducted and my income will become 0, right? So that is how I can actually claim the deduction. I can make a partial claim in order to save my QCDs. If I would have claimed the whole 7,000, my QCDs would be wasted, right? I could have not claimed the 3,000 deduction for QCDs, and it is not like I can also carry forward the QCDs. So they are completely wasted. So for saving them, I can carry forward it and actually make a partial claim to save my QCDs. So the loss amount was 10,000. I have only claimed 4,000 and also saved the remainder of my loss for carry forwarding it to the next years. Right? Partial claim allowed as I already told you. Current year relief. If I claim to make a current year relief, guys, partial claim is not allowed. Okay, partial claim is only allowed if I carry forward the trading loss of the current year to be adjusted with the next year's trading profit. I mean total profit. Okay. So current period set off, if I want to set it off with the current period with my other incomes of the current period, then I can set it off against total profits before QCDs. I should be setting off before QCDs. So my QCDs might be wasted. Okay, because partial claim is not allowed here. Current and prior year relief. That means I can make a current year claim and also after making the current year claim carry back by 12 months. Okay. So it is not like one tax year or something because here the accounting periods of the company is taken into consideration. So you have to carry back 12 months. Okay. And against the total profits before QCDs. And here partial claim is not allowed. So here QCDs might be wasted. Lastly, terminal loss is there. Carry back 36 months against total profits before QCDs. Okay. So terminal loss is given separately if in case I shut my business. So on shutting down my business, I can carry back to 36 previous months. That means if I shut down on 31st December 2023, I can take it back 3 years. That means I can take the profits to be adjusted in the previous 3 years. That is by 31st December 2020. Okay. Or you could just say, I can claim it till the year 1st Jan 2021. So I'll claim it for 2021 the full year, 2022 the full year, and also, sorry, 2020, right? 2020 for the full year, 2021 for the full year, and 2022 for the full year. So because this is the year end, correct? Where I've had the loss. Okay, so the key features of relief are the loss is carried forward for offset in the future accounting periods. The loss is set against the total profits before QCDs, right? It is possible to restrict the amount of loss relieved if in case I'm carry forwarding it to the next years. The loss can be carried forward indefinitely. There is no need to make a current or prior year claim first. That means if I want to carry forward the whole amount directly without making a current and prior year claim, I can do so. A claim for it must be made within 2 years of the end of the accounting period in which the loss is relieved. So if in case my loss is relieved in the tax year 2022-23, so I can make a claim for it, not the tax year, sorry guys, in the accounting period 2022-23, that means maybe my accounting period is ending on 31st December 2022. Okay, so I can make a claim for adjusting the loss to be carried forward by 31st December 2025. Okay. So any loss that I've gotten, sorry, not 2025, 2024, right? It is 2 years from the end of the accounting period. So here if the loss is relieved, it is 2 years from the end of this accounting period, that is 31st December 2024. Okay guys, let us look at this sum. Poppy Limited has a current year tax adjusted trading loss of £35,000 for the year ended 31st October 2022. The company's projected tax adjusted trading profits for the next year, it is 14,000. In the next year, it is 6,500. And in the next year, it is 15,600. Poppy Limited also has property income of £5,000 each year. You have to calculate Poppy Limited's taxable total profits for the 4 years ended 31st December 2025, assuming that the loss for the year ended 31st December 2022 is carried forward and the claim is made to relieve as much loss as possible in each of the future periods. Okay. So let us solve this sum, guys. For 31st October 2022, then for 31st October 2023, 31st October 2024 and 31st October 2025. Right? In this year, in 31st October 2022, he has a property income of 5,000 each year. His trading income in this year it is nil because it is a loss, correct? 14,000, 6,500 and 15,600. 14,000, 6,500 and 15,600. Right? Now, His property income is there, which is 5,000 each year. So his total income for all of the years is 5,000 year, 19,000 year, 6,000, 11,500 here, and 15,600. So 20,600 here. Okay. This is his total incomes. Okay. Total profits. Now, guys, he is actually assuming that the loss for the year ended 31st October 2022 is carried forward and a claim is made to relieve as much loss as possible in the future periods. Right? So he's not intending to make a partial claim. His loss in total is 35,000 pounds. In the current year, he is not making a claim because he intends to carry it forward. So, guys, loss relief will be claimed in the future periods. In this year, 19,000 will be claimed because he is taking the maximum loss possible. 11,500 will be claimed in this year. What is the remainder of the loss? 35,000 is the total loss, minus 11,000 claimed in the next year, minus 11,000, sorry, minus 19,000 in the next year, 11,500 claimed in the year ended 31st October 2024. So the remainder of the loss is 35,000. Just 1 second. Yes, it is going to be 35,000 minus 19,000 minus 11,500. That is 4,500 is remaining. So 4,500 will be claimed here. Okay. And thus here it will be 0, 0. Here it is going to be 5,000 in total because no relief has been made for the current year. And in the last year it is going to be 16,100. Okay, guys. I hope it is clear, everyone. Moving on to the next part. That is the current year relief. Oops. Current year relief. So if a current year loss relief claim is made, trading losses are set off against the total profits before deduction of QCDs of the same accounting period. A current year claim must be made for the whole loss. A partial claim is not allowed here, as I already told you. The claim must be made within 2 years of the end of the loss making accounting period. That means my loss making accounting period may be, say, for the year ended 31st December. I'll not take December this time, some other date. 31st October. Okay. For the year ended 31st October 2022, I had a loss of 10,000 pounds. Okay. So the claim that is to be made for this loss, maybe I want to claim it against the current year and the prior year. Right? So the loss making accounting period is this period. So a claim shall be made within 2 years of the end of the loss making accounting period. So 2 years from 31st October 2022, that is 31st October 2024, I can make a claim for the same by this date. Okay, to adjust it in the current and the prior year if I want to. Okay. Now this sum is not required, guys. You all can go through this by yourself later on. Or maybe we'll do it. Sage Limited had the following results for the year ended 31st March 2023. His tax adjusted trading loss was 40,000. His property income is 10,000. Chargeable gain is 50,000. And QCDs are 10,000. Okay. Now, show how the trading loss could be relieved with the current year claim. Show how your answer to A would be different if the tax adjusted trading loss was 60,000 instead. Okay. So we'll first do the A part, then we'll do the B part. Okay. Just give me 1 second. I'll open a plain slide. Yes, guys. So his tax adjusted trading loss, guys, is 40,000 pounds, and he has other incomes that is 10,000 and 50,000. That is in total 60,000, right? Other income, other profits, you can say 60,000. Now, his loss is tax adjusted trading loss. I want to claim it in the current year, right? So that means I'll claim the loss relief in the current year of 40,000. So 20,000 will be the remainder profits, which is to be taxable. And from that, the QCDs will be deducted. That is 10,000, correct? So the remainder 10,000 is going to be the taxable total profits, right? Now B part. They are saying if in case my loss would have been 60,000 pounds. So maybe my sorry, not my loss. If the tax adjusted trading loss was okay, 60,000 pounds, right? So the tax adjusted trading loss was 60,000 pounds. Okay. So my other income is also 60,000 pounds, right? That is 10,000 and 50,000. Correct. From this, the loss relief can be claimed in the current year. And obviously, no partial claim can be made here, guys. So the complete is to be deducted and it will become zero. So because of this scenario, the QCDs will be wasted. Okay, guys. I hope it is clear. Explain how your answer to B would be different if in the year ended 31st March 2023, the trading profit was nil pounds and the company had 60,000 pounds of trading loss brought forward from the previous accounting period. Right, guys? So that means for the current year, there is no trading loss. Okay, that is what they are saying. They have a trading profit of 60,000 and trading loss brought forward from the previous accounting period was 60. Sorry, what is it? Yeah. So the incomes are same, this 10,000 and 50,000. So his other income is 60,000, guys. But that is property income and chargeable gain. But this time he does not have a loss for the current year. Maybe it is nil. But he had losses in the previous year, which he has carry forwarded to adjust in this year, right? And the losses of the previous year are 60,000. So the tax adjusted trading loss relief, which is brought forward to be adjusted with the current year. Now guys, I also have QCDs of 10,000 pounds. So if in case I want to claim a loss relief for the prior year, right, which has been carried forward this year, so I can make a partial claim because this is carry forwarded loss. So I will make only a claim for 50,000 pounds, right? So 10,000 will be remaining and then my QCDs will not be wasted because I can claim it, right? Because here the partial claim is allowed, so then it will become zero. Okay, guys, I hope it is clear. This sum gives you a clear understanding of the differences of how maximum relief can be claimed depending on where the loss has been. Okay. Now carry back loss relief, guys. We'll take a short break of 10 minutes and after that return with the carry back loss relief. Okay guys, I hope we are back. Let's get started with the remainder of the chapter. So in case of carry back relief, you can actually go 12 months back. Okay. Any trading loss remaining after a current year claim can be carried back under carry back loss relief. Trading losses are set off against total profits before deduction of QCDs of the previous 12 months and on a LIFO basis. LIFO basis means the last month which has come in, that will be considered first. Okay. So that means if in case my year end is 31st December 2022, it will be taken on a LIFO basis. Okay. So firstly, maybe say in the previous year, I just prepared a 9-month period. Okay. In the previous year, I prepared a 9-month period for my accounting. So guys, if in case in this year I have a loss, okay, of 10,000, it can be claimed in the previous year, and also after that it can be claimed in the 3 months of the year before that. Okay. So then it may be carried forwarded to the previous 2 years. I mean carried back to the previous 2 years. If in case my year which is preceding the year of loss, that is actually a shorter period, that is 9-month period. So 3 months I can claim from the year which is before that. Okay. Because I have to take 12 months back and not just one accounting period. Okay. And that will be on a LIFO basis. That means first I'll claim the 9 months period. After that, I'll take the 3 months from the other period. A carryback claim can only be made if a claim for the current year loss relief has been made first. Okay. So if I want to carry it back, it's not like for an individual. If I wanted to take the current year and the prior year, I could do the prior year, then I could do the current year, or maybe I could do the current and then the prior year, or just the prior year, or just the current year. Those were the options available to an individual. But for a company, if I want to carry it back to the previous 12 months, first I have to make a current year claim with all my profits, then I can carry it back to the previous 12 months. Okay. The carryback claim is optional, must be made within 2 years of the end of the loss making accounting period. Okay. So that means if there is any loss for the current year, that is the year ended 31st December 2022, if I want to carry it back 12 months. So for this carryback, I can make a claim by 31st December 2024. Okay. Within 2 years from the end of the loss making accounting period. So this is the end of the loss making accounting period. If I want to carry it back 12 months, I will have to make a claim for that carryback by 31st December 2024. Okay. So this is how you are supposed to do. This is a complete pro forma for the carryback and the current year claim. Whatever is your tax adjusted trading profit and other income and your chargeable gains, the total of that. From that, the loss relief can be claimed for the current year first. Then you can carry it back, or if in case you want to carry forward any amount, you can carry forward it. After that, you can deduct the QCDs and the remainder will be considered as your taxable total profits. Always remember guys, if in case I am making a current or a prior year claim for the loss relief of a company, it cannot be partially claimed. Okay. It should be offset in full. Okay. Marjoram Limited has the following results for the year ended 31st March 2021, 2022 and 2023. The tax adjusted trading profit or loss is 11,000, 9,000 and 45,000. Bank interest receivable is 500, 500, 500. Chargeable gain for the first 2 years is nil and in the last year is 4,000. His QCDs are 250, 250 and 250. Calculate the taxable total profits for all periods affected assuming that the loss relief is taken as soon as possible. Okay. So, yeah, I'll do the sum. I'll just open one slide here. Okay, guys. So in the tax year in the year ended accounting period ended 2023, I have a loss of 45,000 that I would want to claim. Okay. So if I want to go back to the previous 12 months, I will have to first make a current year claim. Okay, guys. And yes. Mm, yes. So I'm making a claim to actually go back because I want to claim the loss as soon as possible. That means I will not carry it forward. I will make a claim for it in the current and the prior year. Okay. 2021, 2022, and 2023. 11,000, 9,000, and 0 is my trading income, trading profits. It is a loss in this year. So 500, 500, 500 is the bank interest. Chargeable gain is only 4,000 here. Otherwise here it is 0, 0. And QCDs are 250, 250, 250. But before deducting QCDs, I'll have to make my loss relief. So this will be 11,500. This will be 9,500. And this will be 4,500. Okay. Loss relief that I claim, by claiming it, firstly I'll adjust the current year 4,500. I'll make it nil. Okay. What is the total loss available? 45,000. Right? 45,000 is the total loss, from which 4,500 has been claimed first from the current year. Then I will carry it back to the previous year, 9,500, and this will become 0. So 9,500 has been claimed. Now this is also a 12-month period. It's not like any of the periods are less than 12 months. So I cannot carry it back to the remainder months of 2021, right? I can only claim it till here. Because this is my accounting period where I have a loss, I can just carry it back 12 months. Correct? So here nothing will be claimed, and here it will be totally taxable 11,500. Okay? So my loss relief which is pending, that is 45 minus 4,500 and 9,500, which has been claimed for the current year and the prior 12 months. 31,000 is pending. This can be carried forward for the future adjustments. Okay, guys. I hope it is clear. Now, the length of the loss making period is not important. Full relief is given against the current period total profits. The remaining loss can be carried forward in full in the normal way. Okay. So, if in case the length of the loss making period is actually less than 12 months, maybe say, I incurred a loss during the period which started from 1st Jan 2022 and ended on 30th November 2022. Okay. So maybe during this period I have a loss of 25,000. So if this period is short, this is a shorter period, right? This is 11-month period. This is shorter than 12 months period. So it does not matter whether it is an 11-month period or a 9-month period or whatever. Whatever is the total loss that I've got, totally I can claim it. Okay, guys, if it is in the period of loss. Okay. But obviously, if short accounting periods prior to the year, okay, that means maybe say my period started from 1st Jan 2022 and ended on 31st October 2022. This is a 10-month period, right? And here I've got a loss of 20,000. So this I can completely claim, guys. This I can completely claim irrespective of the fact that it is a 10-month period or whatever. The loss is not restricted. But guys, if in case this was a full 12-month period, that is from 1st Jan 2022 to 31st December 2022, this was a full 12-month period. And if the previous year, that means here you have a loss. In the previous year, it was a 9-month period. That means the previous year maybe started from 1st April 2021 and ended at 31st December 2021. So this was April, May, June, July, August, September, October, November, December, right? This was a 9-month period, right? 9-month ended, right? And I can have an option to carry it back to the previous 12 months. So if in case in this year I have a profit of 20,000, okay, or I'll make it something different, otherwise you'll be confused. Maybe say I have a profit of 15,000 during this period. Okay. So the complete 15,000 will be claimed here, right? And this will become zero, right? But I can carry it back not 9 months, but 12 months in total. So in the previous year also I can go 1st April 2021 to 31st December 2021. I can take 3 months from this period. Okay. I can take 3 months from this period. Maybe my trading profit in this period was only 4,000. Okay. So the loss relief that I can claim here is nothing but the trading profit into 3 by 12. Okay. So 4,000 into 3 by 12 for the previous accounting period. £1,000 I can claim from here, and this will become 3,000. Okay. Because I can go 12 months back, then it will be adjusted in 2 accounting periods. If in case the period preceding, or period you can say before the period of loss, the accounting period before the period of loss is actually a shorter period, that is probably a 9-month period or anything. Okay. If the accounting period in which I have a loss, if that is a short period, it is completely fine. I can make the full claim just going normal way. Okay. But if in case the period before that is a shorter period, then you will take 9 months from this and 3 months from the period before that. Okay. Okay guys, now Star PLC's recent results are as follows. For the year ended 31st December 2020, his tax adjusted trading profit or loss was 24,000, 10,000 and 50,000, and interest income was 3,500, 2,000 and 6,000. Calculate the taxable total profits for all periods assuming the trading loss is relieved as early as possible. Okay, I'll just open this. Okay guys, so firstly, in the year ended, I have a loss of 50,000, right? So in the year ended 31st, what is it, May, right? Yes, 31st May 2022, I have a loss of how much? 50,000. Okay. Before this, there is a short accounting period, that is 5 months. So if 5 months are adjusted here, 7 months I can take from the previous period, right? 7 months I can take from the previous period. So 5 months ended, what is it? 31st May 2021. Right? That is, what are the profit? Tax adjusted trading profit of 10,000. Here it is nil, right? And before that, the year ended 31st December 2020. That is how much? 24,000. And here also 3,500 and 2,000. Oops. 24,000. The interest income is there. 3,500, 2,000 and 6,000. So my total incomes for all the years is 27,500, 12,000 and 6,000. Correct guys? Now guys, these are all my total incomes that I've calculated. I want to go and adjust it with the previous 12 months, but before that, I will have to make a loss relief against the current year. Right? That is 6,000 will be adjusted this year. So this will become 0. Right? I'll do the 0 later on. 6,000 is adjusted this year. The total loss is 50,000 available. out of which 6,000 is claimed this year. In the previous year, 5 month ended, I can make the whole 12,000 claim, correct? So that means 12,000 will be deducted here. So the remainder is nothing but 50,000 minus 12,000 minus 6,000. That is 32,000 of loss is still remaining. Okay. And I have adjusted only in the previous 5 months. Correct, guys? Because this was just a 5 month period where I had a profit of 10,000 and 2,000. So I can also take 7 months from this period. Right? I can also take 7 months from this period. Loss relief from the previous year, I'll state this here. That is 12,000 deducted here. And from this, it will be 27,500 into 7 divided by 12. This much loss I can claim. 27,500 into 7 divided by 12. That will give me 14,992 I can take approximately. So here it will be 0, here it will be 0, and 27,500 minus 14,992, 12,508 will be the profit of this year. Okay, and 14,992 deducted more. So 32,000 minus 14,992, that is 17,008. This much of the loss can be carried forwarded to the next years to come. Okay, I hope guys it is clear to you all. If any further doubts, you can directly ask me on the comment section. Okay. Now moving on to the last part, that is terminal loss relief. Then we have the choice of loss relief, that is not important, and we'll do some capital losses and property business losses. Okay. Okay. So for the terminal loss relief, guys, when a company incurs a trading loss during the final 12 months of trading, it is possible to carry back that claim set against the total profits before QCDs of the 3 years preceding the loss-making period, not 12 months. Okay, it should be 3 years on a LIFO basis. That means technically you can say 36 months. I can carry it back 36 months if in case during the year of cessation of my trade, I have a loss, I can carry it back with the previous with the previous 36 months and adjust it there. However, the company must first claim to set off the trading loss against the total profits before QCDs of the current accounting period. Okay. Where the company has period of accounts for a period other than 12 months, that is during the 3 years, then apportionment will be necessary in the same way for a carryback claim that was made. So that means technically, if in this case, I wanted to claim a loss relief. Okay. Maybe say in this year ended, I shut down my business on 31st May. Right. So I wanted to claim a loss relief. So I can go 3 years back. Right. And adjust it. So 3 years back when I do it, that will technically be till 1st June 2019 I can claim it. Correct? That is 21, 20 and 19 year. Okay? Till 1st June 2019, whatever are the profits, I can adjust it with that. Correct? So that means, firstly, I'll go 5 months here. Then I'll go to the previous year. Right? Then I'll go to the previous year. But still, 3 years are considered. But how many months have been considered? This was a 5-month period only. So 5 months plus the 12 months of this period plus the 12 months maybe I'm assuming for this period. So technically 5 plus 12 plus 12, that is only 29 months still are considered. So out of the 36, 7 months are still pending. So I'll also go to the year before that to actually take the 7 months from it. Okay. Because I have to take 36 months. Okay. Till 36 months it is allowed. Okay. So I hope guys it is clear start to end. You can just solve it later if you want to, or sum on this, and it will be done on a LIFO basis. That means if I go back, the first year which comes into existence, that will be taken first, then the next year which comes into existence, then the year after that. Okay. However, the company must claim to set the trading loss against the total profits. Okay, this we have read. Okay, nothing to be dealt with here. Moving on to the last part, that is choice of loss relief. Yeah, then we have certain property business losses and capital losses to be understood. So guys, choice of loss relief. What is choice of loss relief? Because I have a certain types of loss reliefs that I can make. Maybe I can carry forward it to the next year, or maybe I can make a claim in the current year and the prior year. All these are options which are available to me. Okay. Now, because of these options, there are certain advantages and disadvantages to it. The first thing is a cash flow. A company's cash flow position may affect its choice of loss relief. Okay, that means if in case in the year 2022, 23, the company does not have too much money, okay, or too much cash. They do not have. Maybe they have a trading loss this year, but their other incomes are also there which are quite high, right? Their other incomes are also there which are quite high. Now, for this trading loss that they have for this year, maybe they can carry it forward to the next year or make a current year claim. But if they carry it forward to the next year, on their other incomes, they will have to pay tax right now, and they do not have too much money. So, if in case the cash flows are less, so your cash flows may affect the choice of loss relief that you want to make. So, if my money is less, I'll choose to make the relief in the current year only, right? By adjusting it with my other incomes, because I do not have too much money to pay to the government. So technically, I can make a loss relief in the current year, and thus I will have to pay less money this year, because obviously the loss relief will be claimed with the current year total profits, right? And if in case I have money right now and I feel in the future date, I would actually generate more trading profits so that I can, use the whole amount and also save my QCDs, because partial claim is allowed. So I would do that. Okay. So cash flows are an important aspect which affect the choice that the company makes for the relief that they want to claim. Okay. Loss of relief for QCDs. So obviously, as I told you, if in case the company carry forwards the trading losses in the future dates, they can make an adjustment in the future periods total profits. That is, also they can make a partial claim. That means if in case they have paid any QCDs, they can save the QCDs also. So the company should expect that if in case in the next year they are paying some QCDs, it is better off for them to carry forward it, right? So that they can claim a relief for the loss also completely by making a partial claim, and also save their QCDs, which is not wasted. Okay. Yes. And one more aspect is there, that is cash flow. On the other hand, could be understood if in case the company makes a current year and the prior year loss relief. Okay. Makes a current and the prior year loss relief. Then all of their tax liability will be reduced by that loss relief that they have made. Right. So they will have to pay very low tax. And if they carry forward it, they will have to pay lower tax, but in the future date, not right now. Correct. So technically, maybe in this year, they have a tax liability of 2000. Okay. But if they claim the loss relief, their tax liability will land up to 1200 pounds. So technically, they have saved 800 pounds right now itself. Right. So if they in case make a current year and the prior year claim, they are able to save 800 pounds immediately, because they will have to pay only 1200 pounds of cash. Right. So technically, this income they can be using it anywhere else, like investing it somewhere or anything. But if they do not make this claim, then they will have to pay the complete 2000 pounds and on right now, and the losses may be carried forward to the future years, right? So technically, those it may take time to actually be converted into cash. Okay, if in case I carry forward. So that is also affecting the company's loss relief choice. Yes, I think this sum you all can do it by yourself. It is not required, guys. Okay. Let us now understand property business losses. Okay. So what are property business losses, guys? Property business losses are automatically offset, that is mandatory, against the total profits before QCDs for the current period. You don't have to make a claim to carry forward or anything. They are automatically offset against the total profits of the current year immediately. Okay? Any excess can be carried forward and offset against the future total profits before QCDs of the company. Okay? So the property business loss that you have, it shall be adjusted in the current year first. It is automatically adjusted. And if in case there is any unrelieved property business losses, it can be carried forward to the next year. Note that a claim to carry forward a loss and offset it against the total profits of a future period must be made within 2 years of the end of the accounting period in which it is relieved. So if in case I make a claim, obviously property business losses are claimed in the current year immediately, right? So if I make a claim in the accounting period ended 31st December 2022 for the property losses to be adjusted this year, so they are obviously going to be adjusted this year, right? Even though I make a claim or do not. So I will have to actually, if in case after adjusting with the current year, if I want to carry forward those losses, those property losses, if I want to carry forward them, I shall actually make a claim for carry forwarding it within 2 years after the end of the accounting period. So this accounting period ends on 31st December 2022. So I shall make a claim for it by 31st December 2024. Okay. There is no carryback facility for the property business losses. There is no carryback facility which is available. Partial loss claims are not allowed when offsetting the loss in the current period, but are allowed for the losses brought forward for the earlier periods. Okay. So partial claim loss claims are not allowed. You cannot make partial claims when offsetting the loss in the current period. But if in case you are carry forwarding the property business losses, you have an option to actually use them. I mean, you have an option to actually partially claim the loss. Okay. If applicable, the property business losses are set off against the before trade again are set off before trading losses. Okay. So it is better off to adjust the trading property losses before the trading losses for the company. Okay. Because guys, if in case I have the total property loss and a trading loss, the property loss for the current year will be claimed and it will be carried forwarded. Yes. So it will be carried forwarded. But in case of trade tax adjusted trading profit, I mean tax adjusted trading loss, I can carry forward it and also make a current and the prior year claim. So I can do that, right? Okay, guys. Now the last part, that is what is your capital loss. Okay. So capital loss incurred in an accounting period is relieved against any chargeable gains arising in the same accounting period, guys. Okay. So firstly, it shall be relieved against any chargeable gains of the same accounting period. Any excess losses are then carried forward for relief against the gains arising in the future accounting periods. Note that the relief is automatic, no claim is required. A capital loss may never be carried back. Same way for your property losses. Property losses, I don't know why they have not mentioned here. Yeah, they mentioned there is no carryback facility. So same way, no carryback facility is available for the capital losses that you are incurring. And capital losses can only be set against gains. They cannot be set against any other company's income. Partial claims here are not allowed. In the previous one also, partial claims are not allowed when offsetting the loss in the current period, but are allowed for the losses brought forward from the earlier periods. So here, partial claim was allowed if it was brought forward losses, but here partial claim is not allowed anyhow. Okay? Okay, guys. So this brings us to an end of this chapter. I hope start to end it was clear to you. There were some sums which we did not do. We will do it if in case it is required. But we are supposed to do section B and section C questions now. So we'll take a short break now and then return with the section B and section C questions to be done. Okay, guys. Okay guys, I hope we have returned from the break. Let us solve some section B questions first, which is relating to your trading loss relief of a company and also to the corporation tax that you're supposed to charge. Sorry, a basic income tax computation of an individual. Okay, so let's get started with the first section B question, which is related to the basic income tax computation. And also guys, your employment income. So we have not done employment income here, but obviously assuming that you all must have done because we are very near to the exams, I think this will be relevant. Wherever explainable, I will explain you the part of employment income also. Okay. So during the tax year 2021-22, Kim paid interest of 140 pounds on a personal loan. Oops, wait, this is other information. I'm so sorry. The question starts from here. Kim is actually employed as a salesperson by Sharpsuit PLC. That means Kim is an employee. During the tax year 2021-22, her employment package included the following benefits. So what are the benefits that she is getting under the employment package? During the period from 1st June 2021 to 5th April 2021, that means it is a short period, right? So June, July, August, September, October, November, December, January, February, March and April, 11 months, right? Kim used her private motor car for business and for private purposes. She received 36 pence for each business mile traveled from Sharpsuit PLC. Okay. Now always remember guys, the amount she received 36 pence for each business mile traveled from Sharpsuit PLC. So that means what is her business mile that she has traveled? Firstly, we'll calculate that and multiply it with 36 pence. Okay, so this is the amount which is given to her by her employer, but it will only be allowable till the AMAPs, that is your mileage allowances, which are provided by the taxable authorities, which is considered as allowable. Above that, if the employer has paid the employee, then that will be considered as a taxable benefit that the employee has enjoyed. Okay, guys. So here, let us see what is the mileage firstly, which is allowed for business purposes. Kim's mileage during this period was as follows. Her normal daily travel between home and permanent workplace, right? So her normal daily travel between between home and permanent workplace. If it is permanent, guys, it's okay. If she was traveling directly to a temporary workplace and not passing by the permanent workplace, then in such a case, she would have got it as a relief. I mean, she would have got it not as a taxable benefit. It is allowed, right? But here it is a taxable benefit because guys always remember this is an ordinary commuting. This is an ordinary commuting. Ordinary commuting means nothing but home to workplace, workplace to home. Okay. So when she is coming from home to her workplace, that is not allowed, that is not considered, that is separately treated as a taxable benefit because that is not a part of her business. Okay. When she has come at 9 a.m. for work, so when she is doing a 9 to 5 job, during that time, if she is traveling to the client place or to the customer's place for the business purposes, then yes, for that, if she has been provided with something, it will be allowable to Kim. But otherwise, if she has been provided with a private car which she is using for ordinary commuting, that is from work from home, that is from home to workplace and workplace to home, then in such a case, it will not be treated because you have not reached the office yet. Once you reach the office, okay, until you are within the office. During this period, if you've traveled somewhere to the client's place or to the customer's place for business purpose, this is considered as not a taxable benefit. It is an exempt benefit if you have been provided with a car for this travel. Okay. But if you are using that car also to reach to your business place and also from that go home from your office place, so that is your ordinary commuting, right? So that part will not be allowed. So that will be considered as a taxable benefit. So 3,400 is not going to be allowed. Travel between permanent workplace and Sharpsuit PLC's customers, yes, this will be allowed. So 9,200 will be allowed, right? Travel between home and temporary workplace for 1 month. Yes, this will also be allowed. She is traveling in the temporary workplace for 1 month. So how much of it is allowed? Let us see. In total, 9,200 plus 3,400. 9,200 plus 3,400. 12,600 miles is allowed. Okay. But she has used it. Sorry, not this one. These two will be allowed, correct? This one is not allowed, right? 12,600 miles she has used for business purposes and her total miles are 3,400 plus 9,200 plus 1,300. That is in total she has used it for 16,000 miles. Okay guys, so that is what the scenario is given to us. Now let us look at the question. What effect will the use of her car for business purposes have if Kim's taxable employment income in the tax year 2021? I mean, what will the effect of this business car usage will have on the employment income of Kim? Select the appropriate box from the table below. So the amount is given to us and the allowable deduction and the taxable benefit is given to us. Right? So firstly, how much has her employer paid her? His employer has paid her 36 pence. She received 36 pence for each business mile travel. So she has traveled 9,200 plus 1,300 into 0.36 because 36 pence is 0.36 pounds, right? So 9,200 plus 1,300 into 0.36, 3,780, right? And 9,200 plus 1,300 is nothing but 10,500. So the AMAPs which are allowable are 10,500 is the total amount. So till 10,000 miles, 0.45 pence of AMAP is allowed, and on the remainder 500, 0.25 pence of AMAPs are allowed. So the total will be 4,500 plus 500 into 25, 125, correct? So that means 4,625. So she has an option to claim a deduction for 3,780 that the employer has reimbursed it, and or 4,625 that maybe is allowed by the AMAPs, right, by HMRC. So obviously she'll choose this one, right? This is the total amount that she can claim. So technically she can claim up to 4,625, but 3,780 only his employer has paid. So 4,625 minus 3,780. 845 is the additional deduction that she can claim, because she can claim up to 4,625 irrespective of the fact if in case the employer has paid her lower than that, right? So 825 is going to be, sorry, 845 is going to be the deduction. So this is going to be the answer. Allowable deduction, taxable benefit, right? So A and B, right? This is going to be our answer. Allowable deduction 845, I think, and taxable benefit is not there. So I think this is going to be the answer. A is going to be the answer. It is an allowable deduction. So they are asking if that 845 is an allowable deduction or taxable benefit. Obviously, it is an allowable deduction. Okay. Moving on to the next part. What is the taxable benefit in respect of the loan from Kim's employer for the year, for the tax year 2021-22? Let us look at the loan part. On 1st June 2021, Sharpsuit PLC provided Kim with a loan of £14,600 at an annual interest rate of 0.75% so that she could purchase a new motor car. Now, this is a loan provided by the employer, and obviously, the employer is providing a loan to the employee. So, the employee probably is not going to the bank because the employer says, okay, you are my employee, I will provide you a loan with a lower interest rate charge, right? So, the official interest rate charge is actually 2%, but here the employer is charging the employee only 0.75%, right? So, what is his taxable benefit? Guys, 14,600 is the loan amount which is given by the employer for the private purpose of the employee, that is for purchasing her own motor car. And on that, the interest which is actually paid is only 0.75%, which is 14,600 into 0.75%. That is 109.5. But what is to be actually payable? Actually payable, it's 1 second, I'll write it here. This is the amount actually paid, right? What is the amount payable? 14,600 into at least 2% shall be charged on it, right? So 14,600 into 2%, that is 292. Correct? It is 292. So this amount should have actually been paid, but she is only paying interest of 109.75. So just because she is an employee, the employer is charging her lower interest rate, and the additional amount is considered to be her taxable benefit, right? But guys, one more thing here. Always remember, when is the loan given? On 1st June 2021. Correct, guys? The loan is given on 1st June 2021. So you will time a portion because the interest rate is always per annum, right? So from 1st June 2021, and you have to actually tell the answer for the tax year ended 5th April 2022. Correct? So June, July, August, September, October, November, December, January, February, March. 10 months. Right, guys? 10 months will be considered. Yeah. 10 months will be considered. So it will simply be 14,600 into 2%, which was actually payable, into 10 divided by 12, minus 14,600 into 2%, sorry, 0.05%, which is actually paid, into 10 by 12. Okay. That is 243. And here it is 14,600 into 0.75% into 10 divided by 12. That is 91.25. We'll deduct this. So additional amount is her taxable benefit. That will be 151.75. Or you can say, I mean not 151, it will be 152 exactly, right? 243, yeah. 152. So her answer is going to be option D. Okay, guys. I hope this part is clear to you all. Please ensure that you have understood start to end, and if in case any other doubts you have for the same, then you can ask me directly by commenting on it, right? By mentioning it in the comment section. Now, guys, moving on to the latter part. Just a second, I'll show you all. Yes. Okay. Moving on to the latter part. That is scenario number 3. So you have to tell us what is the taxable benefit in respect of the purchase of the television from Sharp Suit PLC in the tax year 2021-22. So let us look at that scenario. On 6th April 2021, Kim purchased a television from Sharp Suit PLC for £50 when its market value was £200. Okay. So technically Kim purchased it and she paid only £50 to her employer, right? Whereas the market value on that date was £200. The company had purchased the television for £800. That is 1 year before. Okay, that is on 6th April 2020. And Kim had used it at home since that date. Okay, so technically, initially they purchased it for 800 and directly gave it to Kim. Okay, for use. Okay, for normal use. They did not get the ownership to Kim, but they gave it for normal use to Kim. And after a year, they actually gave the asset to Kim. So technically, they gave it to Kim and Kim paid £50 for the same, right? Whereas the market value on that date was £200. So you have to identify what is the taxable benefit arising on it, right? Firstly, guys, you have to take the greater of market value, or you have to take the market value at the date of gift, or market value when first made available minus any sort of use of that asset for which you get 20% deduction, right? You have to take the greater of these two to be the taxable benefit which she is enjoying, right? So market value at the date of the gift was 200 pounds, correct? At the date of the gift it was 200 pounds. And market value when it was first made available was actually 800 pounds to her, right? Because as soon as they purchased it, they made it available to the employee. Okay? And from that 20% will be deducted, so 800 pounds into 20%, that is 160. So the remainder is 660 pounds, guys. So technically, what will be the taxable benefit here? The taxable benefit will be higher of 200 pounds, and this minus this 8, sorry, not 660. How much is it? 800 minus 160, that is 640, correct? Just a second, I'll redo this. 640 pounds is the amount, but obviously she has also paid 50 pounds for this, correct guys? She has paid 50 pounds for this, so price paid will also be deducted. I'll deduct it here, 50 pounds, and the remainder will be 590, correct? So it is either this value or this value, whichever is greater. So this is the taxable benefit that she has enjoyed, and the answer will be 590 pounds. Okay guys, I hope it is clear start to end. Okay, moving on to the next part. What is the amount of Kim's taxable income for the tax year 2021-22? So you have to calculate the taxable income of Kim. Okay. Okay. Kim's total employment income, including all above benefits, deductions. So they've directly given you the amount. You don't need to adjust for the taxable benefits and everything. Her total income for the year is 25,000. Sorry, how much is it? 25,650. 25,650 is her total income. You have to calculate her taxable income, right? You have to calculate her taxable income. So always remember guys, this information is provided till here, and during the tax year 2021-22, this is an additional information. Kim paid interest of 140 pounds on a personal loan taken out on 1st January 2021 to purchase a laptop computer for use in her employment with Sharpsuits PLC. She also paid a charitable contribution of 800 pounds to the gift aid scheme. She had no other sources of income. Okay. Now, yeah. So I think this scenario relates to that thing. Firstly, she purchased her own laptop to be used in the business, to be used in her employment. Correct, guys? So she has used the laptop in her employment activities, and for that she has purchased, for the purchase of the laptop, she has taken a loan, right? So whatever is the interest on that loan, she is using her own laptop in the employment activities, and that own laptop she has taken a loan for purchasing it. So the interest that is paid, that is considered as a qualifying interest and can be claimed as a relief against her total income. Correct, guys? So she can claim a deduction for that interest income, that is 140 pounds, right? And she has made a donation of 800 pounds under the gift aid scheme, but that you get a relief for it in the form of extension of ban, right? So that means technically the relief will only be till here, and we have to calculate the taxable income, right? So we will not do the extension of band calculation and everything. So what is the remainder of income? I'll just redo this part. 25,650 less 140 pounds for the qualifying interest, which will give us 25,010. Correct? Now this is her income. From this, the first thing that will be deducted is nothing but the personal allowance of 12,570. So my income will be 12,940, right? I think this is going to be, just a second, 25,650 minus 140. How much is this? 25,650 minus 140. Yes, it is 25,510, guys. Okay. 25,510 minus 12,570. It is going to give us this answer number A, that is 12,940 pounds. Okay. Now the last one. Assuming that Kim and Richard make a marriage allowance election in respect of the tax year 2021-22, match the correct tax impact on each individual. Okay. So that means, let us look at this scenario. Kim's husband Richard stays at home to look after their children while Kim is at work. Richard's only income in the tax year 2021-22 was the savings income of 11,700 pounds. Correct, guys? His savings income was of 11,700 pounds. Now, if in case they are making a marriage allowance, Richard can actually transfer the personal allowance to Kim. Correct? Richard can transfer the personal allowance to Kim because they have made a marriage allowance, right? So if Richard transfers, he should have at least 1260, right? So if his income is 11,700, he can claim a personal allowance only of how much? His total personal allowance is 12,570 minus he has to transfer 1260 to his wife. So technically 12,570 minus 1260, 11,310. He can only claim this much of personal allowance. 310, sir. So technically his taxable income will thus be 11,700 minus 11,310. That will give him 390. Correct? Because he wanted to transfer 1260. Now guys, when he transferred that 1260, what is the benefit that Kim will get? If he has transferred 1260 to Kim, Kim will get directly from her total income tax liability. She will get a benefit of 20% of this. So 1260 into 20%, that is going to be 252, right? So 252 is the value of the benefit that Kim will get from the marriage allowance. Okay, so Richard, personal allowance reduced by 870, obviously not. It is to be reduced by 1260, correct? Personal allowance reduced by 1260, yes. Correct. Personal allowance increased by 870, obviously not. Personal allowance increased by 1260. Personal allowance will be increased by 1260. No, it should be increased for Kim by 252, correct? Income tax liability reduced by 174, no. Income tax liability reduced by 252 for Kim, yes. So technically, only these two are the answers. That is, for personal allowance of 1260, Richard will be deducted, right? Because he has to transfer that 1260, correct? And that 1260 on it, 20% claim can be made by Kim. So her income tax liability will be reduced by 252 pounds. Okay, guys, I hope it was clear. Start to end, not too difficult, not too easy either, right? You all can solve it by yourself. If you all have any other doubts regarding it, you can ask me directly in the comment section. Okay, moving on to the next sum. Loser Limited's recent results together with the forecast for the year ended 31st March 2023 are given as follows. Okay, so let us look at this scenario. Now, in the year ended 31st March 2023, this is for your loss relief of a company. Okay, the chapter that we just did. Right, guys? So there is this year, this year, this year. Okay, you can see there is a 9 months ended here. Okay, there is a trading loss in this year. Okay, property income is there, qualifying charitable donations is there. The future prospects of Loser Limited are currently uncertain. Loser Limited does not own shares in any other company. Which of the following factors are relevant to Loser Limited's decision when choosing which loss relief claims to make? Right? So you have to say whether the loss relief claim to make, the choice of loss relief, that depends on these factors, whether these factors are relevant to the choice of loss relief or not. Okay. Firstly, the timing of relief, obviously it is relevant, right? If I want to claim today, I'll claim today. If I want to carry forward it, I can carry forward it. So timing of relief is very important by taking into consideration that, I would claim it in the future period. That means I'll carry forward my trading loss. If in case I'm expecting that in the future period, I would have more trading profits, right? So timing of relief is quite important. It is relevant to the choice of loss relief that I want to make. Extent to which losses can be wasted. Yes, this is also relevant because what happens is if I want to carry forward it, I can make a partial claim and save my QCDs and also utilize less loss. Correct? And if I do it in the current year for a company, I cannot make a partial claim, so I'll have to adjust the whole loss. Correct? And QCDs will also be wasted and more loss will be used this year. Correct? So this is also relevant. Extent to which QCD relief can be wasted. Obviously, this is relevant. For saving my QCDs, I can make a partial claim by carry forwarding it. But if in case I'm making a current year claim, I cannot make a partial claim and my QCDs will be wasted. So you can say all three are relevant, guys. Okay. Assuming that load, yes, guys. So sorry. Assuming that loser limited decided to carry the trading loss forward and offset it in the next period as efficiently as possible, what would be the amount of unrelieved loss at 31st March 2023? So, assuming that he is carry forwarding everything, what is the loss relief that he can get for the loss that he has incurred for the year ended 31st March 2023? Okay, so 78,300 is his loss. His only option is to carry forward it to the next year, right? Because assuming that he has decided to carry the trading loss forward and offset against the next period as efficiently as possible, right? So in his next period, guys, 60,000 is his trading profit, 3,000 is his property income, and his QCDs is 1,300. So he should claim 60,000 plus 3,000 minus 1,300 only, correct? He should claim only this much loss, correct? So his technically simply showing you all his total income is 63,000. If he claims 1,300 less from this, the remainder can be claimed through QCDs. So his QCDs won't be wasted. So 63,000 minus 1,300. That means he should claim 61,700 of loss, right? 78,300 is the total loss. He should claim only 61,700. Okay. And the remainder of the loss, he can carry it forward for the next years to come. Because he can make a partial claim, right? It is any which way is carried forward. So when he is carry forwarding it, he can make a partial claim. So 16,600 will be remaining, and here 1,300 will be remaining, and he can then use his QCDs of 1,300 and make his taxable income 0 for the year, right? So yes, assuming that he makes his claim, what is the amount of unrelieved loss? This much loss is unrelieved, that is going to be 16,600. Okay, guys, I hope it was clear here. I'll just rewrite this. 16,600 is the loss relief that he can claim. Okay, moving on to the next part. That is, assuming that loser limited wishes to make a current year loss relief claim in respect of the trading loss, select whether the following statements are true or false. Okay, guys, if in case he is making a current year loss relief claim, so what will happen? He has a loss of 78,300. he has property income of 5,600. If in case he's actually trying to adjust it with the current year loss, with the current year other incomes, so then he will adjust the loss relief of 5,600, 0 will be there, and QCD that he had of 1100, that will be wasted, because he cannot make a partial claim if he is intending to make a claim for the current year or the previous year, right? So let us see what they are asking for. The amount of loss used in the current year can be restricted to avoid the wasting of QCDs. Obviously, this is false, because you cannot make a partial claim. You have to use up the full QCDs, right? I mean, you have to use up the full income against the loss relief. The claim must be made by 31st March 2024. It is for the year ended 31st March 2022. So, for the loss period 31st March 2022, the claim for adjusting in the current year and the prior year, the claim must be made within a period of 2 years from the date from the date of the accounting period end in which the loss was actually there. Okay. So the loss making period ends at 31st March 2023. 2 years from this 31st March 2024, by this date it shall be claimed, and that is what they have also mentioned in here 31st March 2024. So this one is true. Okay guys, moving on to the last part. Assuming that Loser Limited has ceased trading on 31st March 2022 and claimed the loss relief in respect of the trading loss, what would be the amount of unrelieved loss at 31st March 2022? Okay guys, so let us look at the scenario first. He is actually ceasing his trading on 31st March 2022. Okay. That means he is ceasing it here. Ignore this period now. Okay. So guys, he has to go back 36 months. 9 months he took from the previous period. 12 months from the period before that. 12 months from the period before that. Right? So 9 months he will claim, and it will be on the LIFO basis, guys. That means first this period, then this, and the remainder if in case from the last period. Okay. Technically, it should extend till this only, but since the 9 months are only there here, you will also take some period from the fourth year. Okay, guys. So this you can ignore. Here he has a loss of 78,300. He'll go 9 months here, 12 months here, 12 months here. Okay. So 9 months plus 12 months plus 12 months, that is in total 9 plus 12 plus 12, that is 33. Right? So 33 months have been utilized, but he can take back 36 months. So he can also adjust it from the prior year, but in the prior year, he can adjust only 3 by 12 of the total profits. Okay, because he can take only 3 months from that. Right? So let us calculate what will be the values. I'll do it here. 30th June 2018. Wait. Yes. Then the next one is 30th June 2019 and 30th June 2020. And the last one, yeah, 31st March 21 and 31st March 22. And here also the year ended 31st March 22. Correct? So this has been given to us, guys. Firstly, we'll take the total incomes. Here it is just 5,300. Okay, we'll first write the trading income. Right, so the trading profit is 15,800, 10,600, 15,700 and 24,300. 15,800, 10,600. 15,700 and 24,300. His trading income is obviously nil. Then property income 5,200, 1,200, 6,600. Sorry, 5,200. What else is there? 1,200, 6,600. 8,100 and 5,600. Right? So his total income is going to be here it will be 5,600. Here it will be 24,300 plus 8,100. That is 32,400. 15,700 plus 6,600. 22,300. 10,600 plus 1,200. That is 11,800. And here 15,800 plus 5,200. That is 21,000. Now let us claim the loss relief. Firstly, it will be claimed from this year 5,600, right? Then you can carry it back to 36 months, right? Your total loss is actually 78,300. Okay. Total loss is 78,300. 5,600 claimed from the current year. Then from the previous year, 32,400 has been claimed. Right? So technically, how many months you've gone back? 9 months. Then more 12 months you will go back. 22,300 will be deducted. So 32,400, 22,300 deducted separately. Then again you will go 12 months more. So it will be 11,800 here. What is the remainder, guys? 78,300 minus 5,600 minus 32,400 minus 22,300 minus 11,800. That is 6,200 is the only amount which is spent. Right? In the last year, 21,000 is there. I have already taken 9 months, here 9 months, here 12 months and here 12 months. So only 3 months I'll take from here. 21,000 into 3 divided by 12. That is 5250. Right? The total loss I have 6,200. Correct, guys? I still have 6,200 remaining. So I can claim the full 5250. Okay, so 5250 will also be claimed. So the remainder of the loss will be 850, which is now lost because obviously my company is ceasing to trade and I can only take it back to the previous years and make a current year claim. Right? So from here, 5250 maximum will be claimed. That is into 3 by 12. So here it will be the remainder will be taxable, which is 21,000 minus 5250, which is 15,750. Okay. Now let us see. Assuming that loser limited cease the trading on this date and claim the loss relief in respect of trading loss, what would be the amount of unrealized loss at 31st March 2022? It will obviously be, I guess we have made a calculation mistake. It should be 950. Correct, guys? Let me just check it again. 78,300 minus 5,600 minus 32,400 minus 22,300 minus 11,800 Plus 5250. Yes, it is going to be 950. Correct? So not 850 guys, it is going to be 950. When you do this total, you will get the amount. So 950 is the unrelieved loss and this is going to be our answer for the question 5. Okay. I hope guys start to end all the section B questions were clear. With this guys we come to an end of our section B questions. Okay. Later on we'll also solve a mock. There also separately we are going to have 3 more section B questions for you to solve. Okay. But that we will do in the next class. Now we'll do one last section C question. But before that we'll take a short break of 3 minutes to 5 minutes and we'll return with the last question to be solved. Okay guys, I hope we are back. Now let us solve the last question for today. Okay, that is a section C question. For 10 marks, you have to identify different things. Okay, this scenario relates to three requirements that you're supposed to comply with. You should assume that today's date is 15th February 2022. Jason is currently employed by Initial PLC as a sales manager, but he is considering resigning on 14th March 2022. Okay, and taking up an offer of employment with subsequent PLC, which would commence on 15th March 2022. Okay, guys. So he has an opportunity and he might actually grasp this opportunity, which would commence on 15th March 2022. If employed by subsequent PLC, Jason will receive a higher base salary and more benefits compared to if he remains employed in initial PLC. However, Jason wants to know how much more income tax he will have to pay for the tax year 2022-23 should he take up the new offer of employment. The following information is available for the tax year 2022. So this is the scenario given to you guys wherein today's day is 15th Feb 2022. By the year end, he's intending to actually, um, he's intending to actually change his employment. Here in initial PLC, he was a manager, and after that, he is getting an employment opportunity in subsequent PLC, okay, which would commence on 15th March 2022. Okay, if employed by subsequent PLC, he might receive higher basic salary and also benefits. So technically, he may be intending to switch his job, but on the switching of his job, whatever is his additional benefit, on that how much additional tax he will have to pay, that he wants to check, so that accordingly he could decide if he wants to switch the job to a better one or not. Okay. If Jason remains employed in initial PLC, rather than taking up an offer of employment with subsequent PLC, he will be paid a gross annual salary of 1,80,000 pounds. So his gross annual salary, that means inclusive of all the benefits and everything, it is 1,80,000 pounds during the tax year 2022-23. Jason will contribute a total of 8,000 pounds into Initial PLC's occupational pension scheme. So he is paying every year occupational pension, a contribution to an occupational pension scheme. So this shall be deducted from his gross annual salary, right? In addition to his gross annual salary, Jason expects to be paid the following bonuses by Initial PLC. The amount is 22,000 pounds and 24,000 pounds. The date of payment is 30th April 2022 and 30th April 2023. Okay. So technically we have to identify that which one is applicable for the year. Okay. Our tax year is 2021-22. Right? Because it is 15th February 2022. Our tax year that is considered is 2021-22. So the date of payment, guys, if we look at, this is at 30th April 2022. That means in the next tax year. So this will not be applicable and this will not be applicable either, right? But we don't have to look at the date of payment because here it is a manager, right? And usually managers or directors who have a higher post, you have to take, they can actually manipulate the timing of payment to actually save their tax or anything. So you have to take the date of entitlement if in case it is earlier. Okay, you have to take the date of entitlement if in case it is earlier. So simply you will understand and you will have a clear understanding of this if you go through the chapter of employment income. So the date of employment is 15th March 2022. That means this one belongs to this year, correct? 2021-22 tax year, correct? Because your tax year ends on 5th April 2022, and also it is in the respect of this year only, right? But anyway, this doesn't matter. The date of entitlement is 15th March 2022, and here date of entitlement is 15th March 2023. So this is for the tax year 2022-23, right? It is not relevant for this tax year. Our tax year that we are considering is 2021-22, right? So we will only take this into consideration while calculating his total income, right? Throughout the tax year 2022-23, Jason will be provided with free meals in initial PLC's staff canteen. So in initial PLC is also given free meals. The total cost of these free meals was 1440 pounds. Free meals in the staff canteen are available to all of the initial PLC's employees. So technically here Jason, this 1440 pounds, I agree, Jason PLC is, enjoying this benefit, but it is not an additional benefit which is enjoyed by Jason PLC. It is provided by the company to all of its employees, right? So it is not like, he is getting it in an exception or something. So technically this is not his taxable benefit. Okay. It will not be considered as taxable benefit. If only Jason was given free meals, then it would have been his taxable benefit. Otherwise it is not. Okay. Then further they are saying on 1st August, okay, I think now it is not relevant. Now it is relevant to, okay, let us first read through the whole thing. Then we'll decide what is relevant and what not. On 1st August 2022, subsequent PLC will provide Jason with an interest-free loan of 1,40,000 pounds. Okay, so subsequent PLC is going to provide Jason with an interest-free loan of 1,40,000 pounds to help him purchase a main residence. No loan repayments will be made before 5th April 2023. Where possible, subsequent PLC will payroll the tax benefits provided to Jason so that the related income tax liability will be collected under the pay system, right? That is a good thing because every employee should do that, right? So Jason will have no other income for the tax year 2022-23. Now let us look at the scenarios that what they are mentioning. For the first scenario, state one advantage and one disadvantage for an employee if their employer payrolls the taxable benefits provided to the employee. So what is an advantage and a disadvantage? Firstly, we'll answer the A part. Advantage of payrolling the income tax liability of an employee, right? So what is the advantage, guys? The first advantage is that there would be less I would say differences in the actual tax liability at the tax year end and his pay as you earn, and thus the employee would not have to file self-assessment, correct? Because mainly his income is his employment income, and for that he is already paying the PAYE through his employer. So there is nothing else to be dealt with. So that is an advantage of PAYE, correct? Now, what is the disadvantage of payrolling? Income tax liability of an employee. Disadvantages, guys, would be cash flow issues, right? That may be the employee would have to pay the income tax liability, income tax, as he earns, right? That means under PAY, correct? Say, so he would have to pay immediately as he earns, thus resulting in adverse cash balance, right? Or you can say cash flow, which could bring value, that is known as time value of money, if paid later on the due date, right? Through self-assessment. There are many other advantages also, guys, that the employee does not have to fill the self-assessment form. He does not have to pay the administration and the legal fees for the self-assessment and everything. So it is directly dealt with at once when he pays the PAY. And also there is a disadvantage that I have mentioned here. Okay. So you can mention in your own words, guys. They test you everywhere. Not only just your calculations are being tested. Let us look at the next part, what they are asking for. Calculate how much of more income tax. Oops. Yes, calculate how much more income tax Jason will have to pay for the tax year 2022-23 if he takes up an offer of employment with subsequent PLC rather than remaining employed by initial PLC. Okay, guys. So we have to calculate that. Your answer should be based on separate calculations of Jason employment income for the tax year 2022-23 under each employment alternative. And guys, also you should indicate by the use of zero any items which are not taxable or deductible. You are not required to calculate Jason's national insurance contributions. Okay, that is cool. So we just have to show that what could be the net effect or what could be the increased tax liability because he is switching it to subsequent PLC, right? So firstly, we'll do it for initial PLC, guys, shall we? That is the B part. We'll calculate the income of, what is the name? Jason, right? Under initial PLC, right? So what does his income include? Firstly, it includes 1,80,000 pounds, that is his gross salary. Right? Then what else is there? He will contribute 8,000 to the occupational pension scheme. So before that, there is also a bonus, right? He has received a bonus and it will be as per the date of entitlement. 24,000 will be considered and 22,000 will not be considered. Just give me 1 minute, guys. I'll be back in 1 minute. We'll take a break of 1 minute only. Yes, guys. So let us continue. Yes. So according to his date of employment, guys, we have to check that what is his date of employment and everything. So here date of, sorry, not employment, entitlement. His date of entitlement is 15th March 2022. Correct? His date of entitlement is 15th March 2022 and we have to calculate for the tax year 2022-23. Correct, guys? You have to calculate how much more income tax he'll have to pay for the tax year 2022-23. So that means this will not be relevant. This will be relevant here, right? Because 15th March, it relates to the previous year 2021-22. but we have to calculate for 2020 to 23. So this is during that period. So this will be relevant. So his bonus of 24,000 will be relevant, which was he was entitled for it on 15th March 2022. I'll write here income of Jason under initial PLC for the tax year 2022-23, right? Then obviously he has made occupational pension contributions, right? Before that also one more thing, I'll write bonus for of 22,000 that will have a nil effect because it was entitled he was entitled for it on 15th of 2021, 15th March 2021, right? And then also his pension contributions will be deducted because he has paid for it 8,000. If in case his employer is also contributing for him, that is initial PLC, then it will be considered as an exempt benefit. Always remember that, guys. Okay. Is there anything that they've mentioned regarding the employer? No, right? Oh. So only he is contributing, his employer is not contributing. So pension contributions 8,000 will be deducted, and also there is his free meals that is provided. So free meals that is exempt. So I'll write here 0 because they've told me to indicate it through 0 wherever possible. So his total income is going to be 1,96,000. That is obviously he is a higher rate taxpayer. So there will be no personal allowance given to him. So his income tax liability, sorry, is an additional rate taxpayer. So personal allowance is restricted after 1,25,140. After that, you'll get no personal allowance. So for the first 37,700, he will be taxed at 20%, right? Then for till 1,50,000, from 37,700 till 1,50,000, that is 1,12,300. It will be taxed at 40%. I'll just check 1,50,000. 37,700, yeah, 1,12,300 it is. Then his income is even above 1,50,000. So on that he will pay 45% tax. So his income tax liability under initial PLC will be the total of all this 90,125. Okay. Now hmm, has he been provided with something else under yeah, will payroll the taxable benefit? Okay. Okay, guys, I think one slide is missing here that should have been indicating you about the subsequent PLC information. That if subsequent PLC is making all these benefits and everything, so how will be the calculation? Okay, guys, the remainder of the sum we can do it next class because I'll have to add it. Otherwise, we'll just hold on for 2 minutes. I'll add that part because that is somehow skipped here. Just give me 1 minute, guys. Okay. Okay, guys. So this was the part that was remaining. After these 4 points that he has done under initial PLC, we have to also see that what is the scenario for him under subsequent PLC. Okay. So see, firstly, if Jason takes up the offer of employment with subsequent PLC, then he will be paid a gross annual salary of 2,05,000 pounds during the tax year 2022-23. Subsequent PLC will contribute a total of 9,000 pounds into company's occupational pension scheme on Jason's behalf. This is going to be considered as an exempt benefit, as I told you. If the employer is contributing on Jason's behalf a certain pension contribution towards the occupational pension scheme, then it is going to be considered as an exempt benefit. Throughout the tax year 2022-23, Jason will be provided with a hybrid electric car which has a list price of 62,500 and an official CO2 emission of 25 grams per kilometer. Okay, so this has 25 grams per kilometer, but this is a hybrid car. Okay, so it depends on the electric range. What will be the what will be the appropriate percentage, which is 25 miles here, guys. Okay, so 25 miles is charged at 13% only. You can go through this part from your employment income chapter. You will understand it. So 25 grams per kilometer into 13%. I mean, not 25 grams per kilometer into 13%. The appropriate percentage is going to be 13% only for such a car. So his taxable benefit will be 62,500, which is the list price, into 13%, guys, which will simply be 62,500 into 13%, which is 8125. Right. So this is his benefit. 2,05,000 is his income. This is an exempt benefit. And for the last one, for a period to 6th April to 31st July 2022, subsequent PLC will provide Jason with living accommodation in a purchased property by the company in 2012 for 1,40,000 pounds. Okay, that means the property was purchased on in 2012. The property will be valued at 2,85,000 on 6th April 2022. If the property which had been purchased by the employer more than 6 years ago, before that he has provided to the employee right now, then the original value of the property becomes irrelevant and you have to take the market value on the date of transfer. So that is going to be 2,85,000, guys. Improvements costing 17,000 pounds were made to the property during August 2022. The annual value of the property is 4,800. Correct, guys? So we have to do the living accommodation calculation here, right? And lastly, he has made subsequent PLC will also provide Jason with an interest-free loan of 1,40,000 pounds to help him purchase the main residence. No repayments have been made during the year. So the official interest rate is 2%, and obviously he is paying no interest because it is an interest-free loan. So the total will be considered as a taxable benefit. Okay, but he has provided the loan on 1st August and we have to do it for the tax year ended 5th April 2022. Sorry, 2023. So from 1st August to 5th April 2023, August, September, October, November, December, January, February and March. Only for 9 months the taxable benefit will be there. Okay. So guys, let us calculate under subsequent PLC. Yes. Firstly, under subsequent PLC, his gross salary is there. That is 2,05,000. Right? Then his other taxable benefits are also there, guys, as we saw. You can see here. Firstly, he has an exempt benefit, that is employer's contribution. I'll write here pension contribution. and I'll write here employer's contribution. Okay. So here it will be 0. Correct. Then what else does he have? He has an hybrid electric car. On that, his taxable benefit will be list price, that is 62,500 into 13%. So 8125 will be for that. Then what else is there? For the living accommodation, guys. Now for the living accommodation, wherever the amount exceeds 75,000 pounds, you also have to make an additional charge. So let us look at that. Firstly, the market value. Market value at the date of transfer was 2,85,000. Right? Improvements will not be considered here because improvements are considered when you take the original value of the property and then add the improvements to it. But here you are taking the market value directly. So that is inclusive of the improvements, right? Is the reason why the market value has increased. So improvements will be 0 and the limit is nothing but 75,000. Correct? So 75,000 will be deducted and thus the total value that I will get, that is 2,10,000, which is the additional amount. On this, obviously, guys, we are going to charge 2%. But when is the property given? For a period from 6th April to only 31st July 2022. So, April, May, June, July. Only for 4 months it is given. So, only for 4 months there is additional charge will be there. Which is nothing but 75,000. Sorry, 2,10,000 into 2% into 4 divided by 12. Okay, 2% is the charge above, over and above 75,000. Okay, so here guys, simply the additional charge is going to be into 2% into 4 divided by 12. Correct, which is going to be 1400, right? So I'll just write here for the living accommodation. Firstly, the annual value, guys, is 4,800, right? The annual value is 4,800, but I have given it to the employee only for 4 months, right? Annual value is right, 4,800, correct? What is the annual value of that property? Yeah, you can see the last word, that is 4,800 is the annual value, but I have given it to the employee for 4 months. So it will be 4,800 into 4 divided by 12. And the additional charge on the living accommodation that we calculated, that is 1,400. Right? Lastly, the beneficial loan, guys. The loan is given interest free, but the basic interest charge should be at least 2%. So the remainder is the benefit that he has got. That is the total amount. Correct? So his loan amount is 1,40,000 into 2%. And when did he give the loan? He gave the loan on 1st August. Correct? He gave the loan on 1st August. So August, September, October, November, December, January, February and March. Okay, only 8 months are there, not 9. Okay guys, don't get confused, only 8 months are there. So into 8 divided by 12. 40 to 2% into 8 divided by 12. So this brings his total benefit to him. I'll just write this as 1867, okay? Otherwise everything will be in point. So his total income under subsequent PLC will thus be 2,17,992. Obviously here he'll have to pay higher tax because he is an additional rate taxpayer in both of the cases, right? So you can calculate the income tax liability and this compute the difference. It is very simple. That much you can do by yourself. Okay, so this will bring us another 11 marks. And what is the last part that they are asking for? If Jason decides to resign as an employee of Initial PLC on 14th March 2022, briefly explain the main content and purpose of PAYE under Form P45. Okay, so technically, guys, Form P45 is wherein the employee is actually, the employee is going to fill this Form P45 so that his taxable earnings and income tax is deducted under this together with the tax code that he get, right? So he gets a tax code and according to that he can deduct his taxable income and show that this is his income and that is his deductions or relief that are available. And Jason will also actually give a copy to the form to subsequent PLC so that he can correctly calculate the PAY, right? He can correctly calculate the PAY for the same. I hope guys that is clear to you all start to end. If there are any other doubts, you can ask me. This was a complete sum for 15 marks. I hope you all have understood it, every aspect of it. If in case any other doubts regarding the same, you can actually contact me directly by mentioning on the comment section that whatever I have doubts. Okay. With this, we end today's session, guys. Thank you so much for your time and efforts. In the next session, that is tomorrow, same time, 9 a.m. to 1 p.m., we will do a mock paper so that you can understand start to end all the calculations of your taxation. Okay. Till then, bye-bye everyone. Thank